Hey, good morning, everyone, and welcome. It's almost 7:30, but I think we'll just jump right in and get started. It is cold, it is wet, and I guess maybe summer's over. That's too bad. Uh, are we're kind of sad to drop kids off at school in the dark every day. But all right. So as we get started, for those of you that are here the first time, we'll be here for 20 minutes. We're going to cover everything that's happening in the grain markets. We're going to get a good picture of multiple time frames on the charts, and then we're going to call it a week. We do have a USDA crop report next week. That is on Tuesday, and we'll see what happens. I think the analysts and everybody that is paying attention is leaning to the bearish side on those reports that the USDA is going to raise yields and potentially cut demand. So I think the general bias is for larger carryouts going into that report. So what I want to start with today, I want to take a minute and I just want to write out with you all of the bearish and all of the bullish things that are happening by each crop, okay? So let's go bearish bean things first. Bearish bean things, there's a lot of them, okay? And we could probably spend hours talking about how bearish the soybean market is. So let's start with the U.S. crop growing by full bushels per acre, okay? The USDA may raise it as much as a full bushel is what some people are talking about. That's an insane number. The South American planting season was perfect. When the crop went in the ground fast, it went in the ground flawlessly, and that means that it should be an earlier harvest, which shortens our export window into China. Okay, so that's really bearish. It's really bad. Now, on top of that, the South American weather so far is ideal. Ideal weather. So not only do we have an early crop with tons of acres planted, but it should also be a monster crop. So that's not good at all. And then the other thing is that our exports absolutely suck today. So that's a scientific term for we don't have any. So the export market is not in good shape, and we just don't have anything going there. So if I go through the bearish things on beans, let me then turn to the bullish things on beans, which there is absolutely nothing fundamentally bullish at all about beans except for price action. That's it. That's the only thing beans have going for it. The price action over the last couple of several days and last couple of weeks is building and is really good, and we're going to go through that here in a minute. So stay tuned, because these two things cannot be that disparate for very long. I will tell you that this reminds me of last year into the August crop report, because nothing could have been more bearish going into for the market than when we were immediately prior to and what that report said. But the bullish thing was price action. So we'll see. All right, now let's go to bearish corn things, okay? Corn's got a little bit different story. So here's the bearish corn things. Raising yields, U.S. raising yields, right? That's a big bearish thing. StoneX came out yesterday and said, or came out I think Monday, said 177.7 is their yield, which is up the full 1.1 from where the USDA is. And lots of analysts are kind of in that range. There's really nobody talking about lower yields on either corn or beans. The next corn thing that's not that great is exports. I'm not going to say that they scientifically suck as bad as soybeans, but they're behind. They're not as good, and the sales pace is not as good as we would like them to be in order to meet USDA targets. Okay, but that's really about it. This is really about the bearish thing on corn. It's not nearly as in bad a shape as beans. So on the bullish side, let me go through the list there. Basis, spreads, ethanol grind margins are screaming hot. feed demand is outstanding, and the global supply is weak. So corn really actually has some nice bullish things underpinning it, and it doesn't matter what people say on Twitter or anywhere else about the corn market. You really can't argue with the fact that basis in a lot of places has rallied 50 cents during the month of October, harvesting either the second largest crop or the largest crop we've ever harvested. And you can't argue with the fact that ethanol margins are screaming to an all-time high, and are just we cannot get enough fuel in order to meet the needs that are out there. So corn's got a emerging story. We don't know what's happening in beans yet, but something is going on in beans, and we're going to look at that here in about 1 minute. Wheat, I'm not going to list the things on wheat, but here's the deal with wheat. We know we had a total disaster in the north, right? We know Canada and the northern states had a total disaster with spring wheat. We know that that those crops, that spring wheat is rallying, and so is everything else that's grown up there. It was just a total train wreck. And so we've gotten into a position where we're starting to ration demand on spring wheat. And that is bullish for all the other wheat classes as well. As that's happening, we have Egypt and other governments beginning to stockpile grains. So their tenders are getting bigger and they're paying up for them, even in the face of the ocean freight. So the wheat balance sheet is contracting, and governments are starting to worry about their food supply, not only from just an inflationary standpoint, but just from a flat availability standpoint. There's a slight difference between those two things, right? And inflation is one thing, availability is something totally different. There is no price at which a government won't pay to feed its people. So that's what's happening in wheat, and that's why it's kind of picking up and it's rallied so much off of the low. I don't think we're done going up yet in wheat. I don't think we've gotten any type of a signal there. I think you got to watch corn and beans, and we may have a melt up coming, but we've got to have a bean catalyst in order to get it there. All right, now let's look at the charts. Let's start with the weekly charts, and I'm going to go from weekly down to some shorter term stuff here. So corn, this is the weekly chart, right? Last week we had this big impulsive move up. We have been talking about this for a long time, about how we wanted to see support stay above the cloud on our weekly chart. We've done that. Now we're coming down and we're testing kind of the top end of last week's range. And people are talking, oh, the funds are exhausted. Oh, there's no reason behind this move. Whatever. This is really strong. And I don't think that we're done yet, because as we work down to our lower time frames, let's go to the daily. Okay, here's our daily time frame. As we work in here, we have no weakness on this chart. Yes, we have a hook reversal here yesterday, but this is so impulsive. A move back, a little correction is perfectly expected and normal. But the fact is that we've got bullish leading edge. We're up on top of the cloud again. We're working higher on corn, and I would expect it to continue to move on up. If we get out into March and further time frames out, it looks even stronger. You know, DEES of 22 is breaking out to new highs. Everything's looking up in the corn market for now, and I see no reason to cause that to question. So let's look a little bit deeper and look at what's going on. Here's a 240-minute chart. You can see this move is much stronger. I see nothing here that's weak either. You know, as long as we are holding above this cloud level, I see no reason to worry about December corn. And remember, this has happened in the heart of harvest. So if if people are relying on yield and supply issues to argue for lower prices, I just think that's a dead story. I don't not buying it, because we rallied in the face of known fundamentals here of strong action. So I think this is actually in a buy zone on this 4-hour chart, and the closer we get down to the cloud, the better buy it gets. Yesterday's action notwithstanding. All right, now let's look at soybeans. I want to spend a minute on beans. Okay, you got all this congestion level from the June peak to a couple weeks ago, right? We've got all this congestion. We've got all of this choppy, nasty stuff that's happened over here. It's been long, it's been painful, and it's been exhausting to try to navigate through this. But we've held on top of our cloud. We have not busted down inside of it. We have held normal retracements off of this level. We've talked about that for weeks. The retracement level from the low to the peak, and there we go, held 38.2%, which is a completely normal retracement level for off of a Fibonacci retracement level. We've held all of our critical issues. The only thing I don't like about this chart is that we are below where we were 26 weeks ago. So sometimes in technical analysis, right, it's not a perfect science. So you got to go with kind of the weight of the evidence. And as long as we're holding up above this cloud, and we're holding these normal fib retracement levels, that you got to look at this as a buying opportunity. Now let's go to the daily chart, because I think this is where is really interesting. So as we've broken down from really from this peak here back on July 19th, okay, everyone that you talk to would tell you that this is a downtrend. We have a sequence of lower lows and lower highs. You can kind of see them, right? This peak is below this one's below here. You have a sequence of lower highs and lower lows, and that is the technical definition of a downtrend. No question about it, no argument. The problem that argument is running into now is that at this point we've rallied back up above a prior lows. And so if you look at all of the natural chart support that we're currently into, we've got chart support here, we've got chart support right back here, and the most important thing that we've done is we've crawled right back up above this high point right here that was made back in April. So this move right here was really critical, and for a whole bunch of reasons, and I'm not going to go into what those are necessarily, but this range right here is important to trade around. So we found support right and reversed right at the bottom of this prior swing low. Okay, we spiked below it, but we never closed in there. We then immediately turned and re-rallied right back above these support levels. Now we've had a pullback, and we're trying to push up into a higher high. Last week we said beans are at a critical spot, and they're still right at it. But if beans can pop up above yesterday's high, then I think they may accelerate higher and come put pressure up on this 1320 level, which would be these prior highs down here. Now, I don't know why they're doing this. I don't know why we're funneling into a kind of a bear trap or into a more bullish story. I don't know why. The fundamentals don't support it, and I'm not going to sit here and tell you that they are. I have no idea why they are finding the strength that they're finding, but I can't argue with this technical action here either, because we're holding these really important levels, and as long as we stay up above them, I think you got to start looking to the bullish side of soybeans, because the values and the targets that come with this kind of a move are really kind of scary. So if you look at corn, and I'm going to put up a different, or look at beans here, and I'm going to put up a different indicator. that give you some targets. So this level right here is the first one, this 1310 to 1320 level. It's right above the 38.2% retracement of this entire decline, okay? But if we break that, then I think we're highly likely to come all the way up here to this blue line, which is 1418. And if we're able to work up into that, then it actually sets up a move, the move that we were looking for earlier this summer, which is up here in the $15, $16 range on March beans. Is that likely to happen? I don't know. There's no reason why we've even tried to rally back up above back up above these lows here. So I think everybody is on the bearish side of the boat. I think people have just beat this drum to death, and for good reason, right? But the price action's not reinforcing it, and it's not helping. And so if I were bearish and we start taking out yesterday's high and for sure this 1283 level, if I'm a bear, I've got to exit because I've got nothing but risk now for dollars up above me. My gain is very limited because our bearish story is already known, and my downside risk, or my risk of loss for higher prices, is growing exponentially every day we hold these lows. So I think that's really bullish beans. Now the flip side is also true, is that if we do turn around and break this low here at 1235, then I think we are probably going to accelerate and come test the 1150 level. I think we're going to break right on through it, and maybe that'll happen, maybe it won't. And I think the next few days are going to tell us exactly what it's going to do. So stay tuned to beans. Anything can happen in a market, and if we do rally and it moves that far, and we start to break these prior highs, then the fundamentals will manifest themselves. The price action is not lying to us. It will present itself and tell us why it's doing what it's doing. And sometimes, and I'll say this as the last thing on beans. A lot of times the strongest trends are halfway done before the market ever knows why the trend started in the first place. Remember, the price action is digesting all known information from all known traders. So if there are traders that know things that you and I don't, they are taking action in these markets, and it is being presented to us in price action. And I think that this is what this is. So we'll see, but it certainly fits with the inflation story. It fits with the narrative of coffee, sugar, cocoa, cotton, wheat. It fits with every other narrative that's out there, and we'll see if beans don't decide to join that party soon. All right, Kansas City wheat. I see nothing on this chart that's scary. In fact, I think it's just I think it could really get parabolic if just a little bit more news breaks. I know we're 20 some cents off the peak from yesterday, but it's just an intra-week pullback here on the weekly chart. I think we've got more room to the upside on wheat, and I'm not ready to make any sale recommendations at all on that. So here's December wheat. It looks a little bit more gnarly, but unless we get down here and break back into this range, the 760, 750 range, I'm just not even really interested in talking about selling it. If it really does some chart damage, then we'll look at it. Let's go out and look at next July, because I know that's what everybody's really worried about. WN22. Next July's chart, in my opinion, looks even stronger. And as long as we're going to hold up above kind of this shelf right here at 750, I think we're going to press higher. To ration Minneapolis wheat, the problem that market has is that it's rallied and rallied and rallied, and we haven't slowed down demand yet. So that means we haven't gone enough, and I think that is likely to keep progressing forward. So I think we'll just be real patient with wheat for a little while longer. All right, that is 20 minutes on the dot. I hope that was somewhat helpful. I think we're just going to continue, and if we do get some fundamental change or some actual news that's going to change things, we will be really quick to let you know. And otherwise, I think we're going to hold with everything right where we're at for the time being. Remember, there is risk in trading commodity futures and options, and you should only trade in light of your own financial condition and work with a professional if you need help. I hope you have a great week. We will talk to you next Wednesday.